Hi, good morning, everyone. This is Vance Williams out of the United States here in the Seattle area, home of the world champion Seahawks. I noticed they got to go visit the White House yesterday. That must have been fun for them. I started a little bit late this morning, but I do the show whenever I'm ready. I had a lot of things to get together this morning, so now we're going to get started. You didn't miss out on anything while I wasn't talking. But I've got some great stuff to share with you today. It's Thursday, May 22nd. Welcome to my live Forex trading show. Now, in addition to my analysis today, I'll discuss something important that the central bank stated yesterday. It's pretty significant. We'll also take a close look at the charts to see what current price movement is telling us about the buyer and seller behavior. A couple things before we get started. For those who've been waiting for my ultimate training program to open, I'm going to open it up to 7 people on Monday. So if you're interested, it's important that you speak to me first. Not a lot of qualifiers, but I want to know who I might be working with. So if you're interested, let me just show you real quick. All you got to do is go to forexartofwar.com and click on this free consultation and register to speak with me. That just lets me know, you want to talk. And basically, even if you're not interested in the training program, whether you're brand new or you've got years of experience, I'll share with you what you've got to do to achieve consistent profit. And also, signing up here is no obligation. It just gives me. Make sure you give me your contact information and you stay on top of it, because I'll try to contact people maybe a couple times. So make it as easy as possible to contact me. If you have Skype, include that. Include your phone number, that sort of thing. So, and also check your junk mail. There's so much spam now. Just about everything's bouncing, or at least going to junk mail. So keep that in mind. I want to congratulate Jan, who's in the Ultimate Training Program, who just moved to level 3. Congratulations, Jan. And also Jason Lee, who just finished up his 3rd series in level 3, following his trading plan. Just tremendous job. And I don't think it's going to be too long now before Jason's trading live. All right, let's get to this statement I'm talking about that came out of the G20. What I'm about to show you was not really front page news. In fact, where I got it was at the very bottom of a very long article that referenced another article. And so let me just pop that up on the screen so you guys can see it. It said, Bloomberg News has reported that G20 officials, by the way, the G20 has been meeting, will pledge in a joint statement to avoid policies that will lead to competitive currency devaluations and will also oppose trade protectionism. Okay, so I'm not going to spend a lot of time on this, but I just want you to notice something. This is the G20. This is the people who make policy for all the banks in the world. They're saying that they will avoid any policy that will lead to competitive currency devaluations. Now, I understand their intention is to maintain stability, but what this also means is they're not going to allow the markets to operate freely. So, if the euro really just, if, let's say, for example, they're having a bad period, they're not going to allow that currency to devaluate. If the U.S. is just going to print money endlessly, they're not going to allow the U.S. dollar to depreciate endlessly. At least that's their intention. You can read it right there. That's what they're saying. In other words, we're not going to allow, no matter what's happening, we're not going to allow the markets to determine what a currency's worth, basically. So, I mean, that's what I read into it. So the long-term trend that we've been talking about, it's definitely in question. But this can also be an advantage for us as well. If we know this is their policy, then that might give us a sentiment in and of itself. My question is, can the banks control something so big? I don't think so, but we'll only know in the future. Now, the good news is that for the past 5 years, that experience has given us the skills to trade, short-term sentiment, what the markets are deciding, this week or next week or today. It would just be that much better if there were a long-term trend that we could trade. But it's not over yet. We're going to be watching for the pound monthly candle to close back inside that range in about 9 days, and we'll see if they can do it or not. And also, we'll watch to see if they step up their policies to prevent that from going even farther. I doubt they can do it, but it gives you something to watch. So we'll see. But I just wanted you guys to see their intentions plainly stated. No free market adjustments. At least nothing that they're not going to allow anything to happen if they can avoid it, to allow currencies to just fluctuate on their own. So I thought that was very interesting. Okay, I want to remind everyone that this coming Monday is Memorial Day in the United States, so the stock exchange and the banks will all be closed. So if you're, if you're gearing up on your usual Monday morning for trading, I think you'll find there won't be a lot happening. So keep that in mind. Also, I'm going to be taking off Sunday and half of Monday. I usually take off half of Sunday, so I'm going to push that out one day. Maybe spend some time with the family and do a couple other things. But so a little bit of a short week next week. Just wanted you to know that. We had some economic data that came out 4:30 a.m. I had posted that there would be some possible activity associated with this, and that's basically what you see happening right here. If you look at my mouse on the screen, right there, 4:30, boom. So I suggested that we were going to have some reaction to that data potentially. I wasn't really sure how much uncertainty would be associated with that particular data, but coming at the top, like that, whatever it was, it caused them to pull back really quick. We had unemployment claims out of the United States just about 20 minutes ago, and then we have existing home sales coming out in about an hour and 10 minutes, so at 10 a.m. Eastern. I don't expect that existing home sales will be anything significant because the market generally has a good idea of what those numbers are before that information is released. Okay, now I was off to a bit of a late start today, so I haven't actually looked at the charts at all. So we're going to do that together right now. I'm going to just real quickly, when I look at the market, I see immediately on the euro. Let's take the euro first here. And I'll just show you what I do. Again, we're watching for behavior. We're not watching candle patterns, chart patterns. Those are all symbols of behavior. What we want to look at is the actual repetitive behavior. And if you can learn what the repetitive behavior is for price direction, for market conditions, for stop, entries, and targets, if you can learn the repetitive behavior for all the things that affect your probability of winning, you can stack the odds in your favor. And I want you to know that not many people know how to do this in the world, so it'll give you a real edge if you learn how to do this. All right, so the first thing I would do, it looks like I had a fib down here monitoring this flow of money. But the first thing I would do is I'd notice this downtrend. I also noticed that there's exhaustion down here, and there's a range right in here. So the first thing I would do is I would draw a little something to represent this range right across here. And you could make a mental note that price is in a 33 pip range. Okay, so we're not going to have anything significant happen until we get out of this range. Personally, I would like to see this trend advance beyond this level down here before I would consider a trade. There's going to be buy orders sitting in this area. If you're a little more aggressive, maybe you might trade a move right in here. But me personally, I'd like to see. I think a high probability advantage occurs when price moves below 36.31. Now, the other number that I would be watching is I would want to see this volume of money, which is designed to follow the short-term market sentiment, showing you which way the money's moving this week. And we need to see these moving averages turn over to the top side, and then price to move above this level right here, 36.91. And so as price moves up here, it'll encounter some resistance here. If it closes above here, you'll get a little opposition. So this is probably the optimal area right here for the euro. So we'll be looking at a buyer, high probability advantage above 36.91 or below for the sellers at 36.31. And remember, you need only two things to make a really great trading decision. You need a buyer or seller high probability advantage. In other words, they're doing something that they do all the time that shows you that they have a high probability advantage, some kind of behavior, and this is the behavior I'm talking about. So they need to get above there or below there, and then you would basically look for an advantage strong enough, in other words, a range of movement strong enough to enter and exit with good risk management. And that's really all there is to it. All right, so that's the euro. You kind of know what's up there. Let's move over to the pound. Pound is also in a range. Let's zoom in a bit. I'll talk a little bit about this position down here that I have. This is actually a position for a long-term trade if the long-term trend continues. And so this position down here is in, it's in a break-even position. There's no risk involved. But we'll continue to watch it. I should probably talk about the limitations of leverage in the United States at 50 to 1 and holding positions and that sort of thing on another show. So I'll make a note to talk about that, because that's something actually different than what we used to have with the limitations of 50 to 1. All right, so the pound again in an uptrend, looking kind of at the almost a balance for that money, that balance of money that's moving on a regular basis every 1 to 5 days. So it's kind of looking to the downside. Now, obviously, everyone can see this right here. Since there has not been a turnover of this money to the downside, I'd actually want to see price move above here. If these cross over and move back up, then this will become the key level. And you got to keep in mind, what these wicks are telling you is there are sell orders sitting there. So as you come into, if you've got a potential setup coming in this area that you like, you got to know that there are going to be sell orders sitting here to push that price back. So if it's very, very strong, instead of just entering early, you want to wait for a little pushback. All right, so above 69.20 for the buyers. It looks like let me get a different fib on here. No, it's gonna let me grab it. There we go. So I would be monitoring a 76.4 reversal, and this is pretty obvious. It's right there. Sometimes they're more obvious than others, but it's right there. So the high probability advantage for the sellers are going to be below 68.58. Now, the buyers that are in here, there's definitely going to be some stop losses right in this area, so that'll cause price to move very quickly, and make you kind of think for a minute. There's a lot of selling when these are actually stop losses. So look for if this pops below here, and maybe even just a little bit lower. That's where these buyers over here, these bigger buyers, have their some of their stops right in here. So there could be some quick movement here, but the high probability seller advantage is going to occur below 68.58. This range size, what is it? About 47 pips. So pretty typical range size. All right, so let's take a quick look. The Australian dollar and the New Zealand US dollar have been in some pretty huge downtrends. In fact, let's take a look. See how big this last trend has been. It's been about 150 pips. I mean, we've seen bigger for sure, but we've seen this come down. Obviously, this has exhaustion, and we're kind of right in the middle of making a decision right here. So if you wanted to sell this, you'd either need room to get in and out of this trade before it reaches this level. And let's see if you have room to do that. I'd have to drop down to a 5-minute chart to get a closer look at this. I need to see this behavior right here, see if it's correcting. It is. Okay, so there's exhaustion on this movement here, and then there's just not enough room. So you need to move below. Let me put a mark on that. You need to move below, I'd say about 92.11. And then for the top side, it's probably going to work out to be about right there. So this looks very unattractive. You got a lot of selling, and this is basically a correction and consolidation, and not the most attractive situation. But it moves up here and stretches out, then potentially you've got a trade. The Kiwi, let's take a look at it. Kind of a similar story. I'm going to go ahead and put a price on here. 85.82 there, and then also, because there's not enough room here, you want to look for a move below here, 85.40. So these aren't really that attractive to me with this long unusual trend that we've had. I would really focus on the euro and the pound. All right, so now you know what you're looking for on the euro and the pound. Let's see. There we go. So it gives you the numbers. Again, for those of you who've been waiting for my Ultimate Trading Program to open again, there's going to be 7 places available on Monday. All you got to do is register to talk to me, and you can do that at forexartofwar.com if you're interested. Just click right here, leave as much information as you can. Check your junk mail and that sort of thing, because they're going to fill up pretty quick. So if you're interested, just do that, and I'll probably even contact you over the weekend. Okay, so let me see what else. No, that's about it. I want to thank all of you for joining me today. I really enjoy these shows. I only do them twice a week because I trade and I work with other traders, and I've only got so much time with my little boys. But I really do enjoy doing them. I enjoy working with you guys, and I really enjoy helping you guys reach your goals. I want to say one more thing. One of the things that I tell people when I talk to them is I want you to understand that I don't like keep any secret knowledge to myself. I talk about everything freely in my books. I don't hold anything back. And the reason why is because I think that you can read 1,000 books on hitting a baseball and never be any closer. I mean, you can listen to the greatest baseball players in the world and never be any closer to hitting a home run, or even hitting the baseball. And so really the key for me is training. And so if you're wondering, wow, Vince seems like he's telling everything. I am. So, if you want to do this on your own, you can. It'll just take you a lot longer, maybe 3 to 5 years, as opposed to, what I can help you do in 12 months. So that's really it. And it's just really up to your interest, what you want to do. But I just want you to know that I do share everything. There's nothing hidden, and you can always write me with any questions. Now, to the members in our program who are watching, I'll see you guys coming up here in about 27 minutes, and we'll watch the market as the New York Stock Exchange opens together. You guys have a great one. Take care.